All right, hey everybody, welcome to October 29th MakerDAO community call. We do these community calls every Tuesday, pretty much at the same time, 12 in the afternoon in New York, midnight in Beijing. But regardless, we do these calls every week on Tuesday, and we use them for a couple of things. We like to go over the universe in MakerDAO, what's been going on in our space, what's been going on with like MakerDAO itself, in our governance community, in our developer community, and just like our enthusiast community, what's been going on Reddit. I usually like to highlight anything that's pretty much notable that's been going on in the last week. But also, I am always trying to get interesting guests on the community call. And we're in a space where people are like constantly building really cool shit, and so it's a really great opportunity to get some of those builders on here to like demonstrate what they're doing and to like give us a little bit of insight into these things. So today I have Bowen Wang and Scott Sanderson from DDEX. And if you guys don't know about DDEX, they are a decentralized exchange, and they do they're doing a couple of really cool things. I won't steal the spotlight away from them too much, but here I'll pass it over to Bowen, and I'll let him introduce himself to you guys.
Yeah, thanks for the introduction, David. And this is Bowen. I'm the co-founder of DDEX. So we kind of started out in 2017. About 2 years ago, we have been trying out different pieces in the Ethereum community. Back in the days, we are building a spot trading exchange for ERC20 tokens, and then we kind of like switching gears to add more focus on the margin and lending side. And so today, I want to take the chance to kind of like go over our public beta product, which is a margin trading platform that you can borrow Dai and Ethereum to long Ethereum and short Ethereum with 5 times the leverage. So I guess like talk is cheap, so I will just show you guys the product and the entire like the process.
Yeah, this is going to be exciting for me because I'm in New York, so I can't even play around with DDEX.
Oh yeah, we opened the IP for the US users.
You opened it recently?
Yeah, recently for the margin trading platform. Since there's only 3 assets on the platform, which is ETH and Dai, they're both has been being added on the Coinbase whitelist, so it's considerable like pretty tradable in the US.
Okay,
so we can
cool.
that road, and we don't take custodianship anyway. So like our lawyer just gave us the green light for it. So
nice. That's good to know.
Yeah, so everyone who actually in New York, in California, in Europe, in the States, they all can trade on DDEX, which is basically just a smart contract.
And so hold on really quickly, just to give like maybe the people watching an idea of the size of the exchange in terms of liquidity and like daily volume. What's like a daily volume across all of your trading pairs on the entire protocol?
Yeah, so maybe today's daily trading volume is about like 800 Ethereum, which is I think is approximately 150K an on-chain transaction. And normally the dApps on each side of the order book is about 90K Dai on buy side and sell side with the 1% beta spread. Yeah, so kind of like basic overview. Maybe this is a little bit overwhelming, but so this is actually just like where like people can open a long short position, and it's actually there's just a few buttons you can actually click on it, and so people are always coming with this their Ethereum wallet, maybe someone other ledger user, Trezor user, their hardware user, they prefer security more than anything. And they can also use like Wallet Connect, Coinbase Wallet, and Fortmatic, this kind of like mobile phone login, or just like the most people use, I think, is MetaMask. So like they can just use MetaMask to connect their wallet, and let's say like they want to open, so maybe someone got the news from the China last Friday, and they think China is gonna help Ethereum adoption get a wider spread in the Chinese community. So they maybe want to long two Ethereum with maybe like 3 to 4 times leverage. And the very first step is basically just like click on it, how much they want to long and how much leverage they want to get. And basically the very first thing is they just borrowing from the lending pool. So I'm going to talk about later that there's a lending pool within the DDEX product, which is people can supply Dai and earn interest, and other people can borrow Dai to open a leverage position.
So in practice, it's like very similar to DYDX rather than like Compound, because Compound doesn't have the whole DEX side of things. But yeah, that's the right way to think about it, right?
Exactly. So I know Antonio and Joshua really well, and we joke about like we are the Chinese version of the DYDX. But yeah, we actually develop all the things from scratch. And back in the day, so we also like make the market for the DYDX short Ethereum token and long Ethereum token. So here's just 2 steps, very simple. The very first step is just borrowing. So I want to open 2 Ethereum long position with 4 times leverage, which is I'm just gonna use like 0.5 Ethereum as a collateral, and I'm gonna borrow like 279 Dai. And after I click borrow, I basically just went to the MetaMask to confirm the borrowing. Yeah, I have to wait to MetaMask.
So when you do this, is there a liquidation price visible anywhere? I know that there's one on the left panel.
Yeah, there's the liquidation price. So right now I'm just borrowing for the very first step. Okay. I'm just borrowing.
Got it.
Yeah, I don't know why my MetaMask is actually okay. I confirm the transaction, and it normally just takes 12 blocks to confirm like my borrowing, and normally the processing time is just 30 seconds. And let's see how long does it take. And so basically I'm just borrowing, I'm just depositing in collateral. Like I open a CDP, so I put like 0.0 borrow successful. So basically like I open CDP, I put 0.5 Ethereum in it, but rather than so maybe 0.5 Ethereum is only $90, and if I open CDP, I will only be able to draw like 30 Dai. But on DDEX, you can actually put 0.5 Ethereum for collateral and get 279 Dai out. And you can place the order to long Ethereum, and you just have to click another times on the MetaMask, and you can open the position. And right now, it's processing the request. Yeah. And we will just use the borrowed 279 Dai to buy Ethereum to open our like 4 times long leverage position. And I successfully placed the orders, and we just have to wait another 30 seconds for the blockchain confirmation time. And you can actually make yourself a coffee or get a toast for breakfast.
So I noticed that here already we could see the liquidation price like 153.49.
Exactly. Yeah.
Nice.
So right now there's no trading fee. The only fees involved is basically the gas fee you pay to the Ethereum network. And right now my opening position price is at $186. And so the liquidation starts with 110% of collateral ratio. So right now I successfully opened a 2 Ethereum long position. And well, congratulations. I opened the position at 185.79 with a 4 times leverage. And we can see the position details here. Actually, let me zoom in on the right corner. So my position.
Quick question. I know that the 4x leverage with half an ETH was aiming to buy, I think, 2 ETH, and it ended up buying 1.9991. That's just due to slippage. That's like kind of determined by how much liquidity is on the books, right?
Yeah, and also there's a transaction fee involved, which is the gas
Right.
fee. So I opened a relatively small position. So the average trading size on DDEX is about $6,000, but my position is about like, and the demo one I do is about $280.
Yeah.
So that's a small transaction. So it cost a little bit slippage on that, which is 0.009 Ethereum, and that's basically the gas fee for that transaction.
So there is a question in the chat from Bartek. Is the price during the liquidation sourced directly from your own order book?
Actually, I can. So yeah, there's. So we will basically. So there are two ways to participate in the liquidation. So one is that. So we have something like a keeper contract. Keeper. Keeper command line. People can run separate. And when they initiate finding the liquidation process, they can hit the liquidation. The asset being liquidated in the pipeline. And other than that, we will also kind of like mirroring the liquidation. It's a Dutch auction. So we will mirror the distressed assets on top of the order book, and the price will decrease over the block time. Yeah. So right now you can see.
Sorry, can I actually rephrase the question, because I didn't get my answer that I was actually looking for. So my question was not about the liquidation process as such, but what is the price that actually triggers the liquidation event?
Yeah, so it depends on how much leverage you open, actually. So for example, I open a 4 times leverage at $185. And as you can see, the liquidation price right now I have is $153.
Okay, and where does it come from? This price. What is this price that you're talking about? Is this the mid price on your order book? Is the price taken from the outside external exchanges? Where does this price come from?
Yeah, the liquidation price we take from the MakerDAO Oracle.
Oh, that was my question. So that's actually MakerDAO Oracle, but this is a USD price, not Dai, the MakerDAO Oracle.
Oh yeah, we use the Dai price actually. So Dai have like two different price, which is so right now we are on the ETH2 Dai market, so we basically quote everything on Dai, and also like there's liquidation price in US dollars, and we normally take the MakerDAO Oracle and Uniswap Oracle to calculate the Dai US dollar price. But since the liquidation events only happen with ETH2 Dai, so we always quoted the liquidation price on Dai.
So essentially you're using MakerDAO Oracle.
Yeah, exactly.
Okay.
Yeah, and you can see right now, like the collateral ratio right now I have is 131%, and the liquidation happens when it hits 110%. So theoretically, we can add leverage to 10 times, but it's just a little bit too crazy for liquidation. So we kind of like hold on to the leverage up to 5 times for our public beta testing period. And you can see we pay the interest, which is the interest is paid for the people who actually supply into the lending pool. And I think I will just move straight to the lending pool. And as you can see, this is how much money that people has been supplying into the lending pool. So right now we have like about 67,000 Dai and 600 Ethereum in the pool, and everyone can actually everyone can supply it from their mobile wallet, from their MetaMask, and basically it's just like a 1 click away. So let's say like I want to supply like 184 Dai into interest second by second for me. Yeah, a bit of different. I guess like people who are always in this community call has been very familiar with compound and or new or InstaDApp, this kind of like different lending product and lending protocol. One thing that we do very differently is about, okay, so I put 184 Dai into the contract. I get a lending rate of about 5.56, a little bit higher than the MakerDAO in stability fee at the moment, and I'm expecting to have a 10.26 Dai after 12 months. So going back to the interest rate, and I guess you can see like at the amount section right now, and you can see like the dollar just pop up second by second. A bit difference about Compound and DDEX is that we actually have a more kind of like steep curve on the interest rate when the utilization rate is high. So normally when the utilization rate past 50%, it can easily go from like 6% to 10%. And yeah, I guess that's basically it for the entire product. And we also have like spot trading, which is very much like is to die. Like we make the markets and we provide the liquidity, and normally the dApps on each side of the order book will be about $80,000 worth of Dai and Ethereum. So if someone has a CDP in danger and they need to kind of like refund it, and you can always find Dai liquidity with us to kind of like to save the CDP in danger. And if someone just want to long Ethereum with more leverage, and they can long Ethereum on Dai, and someone if want to earn interest on the Dai they have, or kind of diversify their portfolio in different lending product, they can also find yield from DDEX loans as well.
Nice.
So I guess that's pretty much it. Yeah, go ahead, please.
So I know that DDEX, you guys hosted the market for the U.S. stocks pilot that we ran, right?
Yeah.
Besides, like, what are your, I guess, future plans for like having markets for like synthetic assets? Also, how's that pair doing? I don't think I've heard anything about that since it launched or something like that.
Yeah, so we launched, and so we work with Greg and Joe from Maker, and also we work with Alison and her from UMA project, and we list this kind of like a USS stock, which is a synthetic SP500 index on top of DDEX, based on Dai. So it actually we had like 200 traders who actually play around with the synthetic token. And then we actually have like so people actually are really interested in that how the structure works out. But apparently, so we didn't. Most of the volume are muted since there's not that much volatility on the SP500 tokens during that 3 month period, and also like it's kind of like obvious that people want to higher leverage product rather than this kind of like 8% gain for a 12 month period for SP500. So that's kind of like doesn't work out really well for the crypto native trader. But so we have been supporting all the synthetic assets quote on Dai. For example, like the SET protocol, and also like the DYDX short and long Ethereum token. And also there's another one called Market Protocol, has this kind of like a Bitcoin price and floor ceiling derivatives kind of synthetic product. I guess like there's a couple of limitations for this kind of synthetic product. One is basically like the learning curve for the normal trader to understand what's behind the scene. And normally it's really like complicated and advanced kind of like financial engineering product that most of the traders will actually having a really hard time to learn to understand what's going on. And the other thing is that you have to have enough leverage or this kind of like a like a CDP, this kind of keeper, and also discount liquidation process, which is a self-sustainable business model on top of it. and so people can participate into different roles in the ecosystem. And we will be welcome to more of the synthetic assets if they want to pair on Dai for sure. And we also have like a Spot legacy trading platform, has like an entire Dai market out. So
Nice.
yeah.
Cool. All right. Then another couple questions for you. So what does it take for a market maker to start market making on DDEX? Do they just have to have a bunch of liquidity and just start posting limits on both sides and just figure it out that way? Or is there some sort of internal, more advantageous way for bigger positions to kind of move around and provide liquidity on DDEX?
Yeah, so it's basically kind of like so everyone can hook up with the API and basically just make the market. And we also work with a San Francisco company called Hummingbot. Basically, they open source their software. They can kind of bridge the Binance liquidity to DDEX.
Yeah, I think I heard about them.
Yeah, so basically, how Hummingbot works is basically kind of you set your profit margin. So let's say I want to earn 1% on each of the trade, and how much money? Let's say we put like $10,000 in Binance account and $10,000 Dai in the MetaMask account, and every time there's a sell orders, let's say sell like a $10,000 of Ethereum, and I will just buy it back from DDEX. So it cancel out, and I will earn another 1% profit on top of market making. And so everyone can be a market maker, and we also have like this kind of maker rebate program. So we share the revenue with the market maker. So we actually kind of like incentivize them to make more competitive bid-ask spreads and more depths on top of the order book, because we know like the maker. The whole point of MakerDAO actually comes from the big share community when they have the big share without liquidity. So like Maker is like a really high priority for us for any kind of marketplace.
Totally, 100% liquidity makes or breaks markets. Yeah, okay, right on. Wait, so you said that the rebate program for makers is how's that paid for? I thought you guys said that there's no trading fees, right? It's just transaction fees.
Yeah, so right now like the trading fee is completely free, but we still have the maker rebate program because back in the days we have like a maker taker fee, so we charge maker 10% and we charge and 10 bips, not 10%. 10
You
bips.
scared me there for a second. I was like, damn.
So we charge like it's kind of like Coinbase. Like we charge maker for 10%, 10 basis points transaction fee, and we charge like taker for 30 bips transaction fee. And for the maker rebate program, we basically set the maker fee for 0, and also we share the 50% of the taker fee with the market maker that work with us.
Got it.
So most of people actually maybe so that's kind of common practice for the traditional financial market, and it also more like so like people who actually add their liquidity into Uniswap will have different holdings when they deposit and withdraw, but for this kind of like DDEX, this kind of order book like DEXs, that market maker can earn transaction fee on the spread. So it's just going to be more easy for the bookkeeping and accounting, and more easy to calculate the P&L.
Got it. So if anybody on the call wants to ask any questions, feel free to jump in or post in the chat. I guess maybe my last question, actually, I think I have 2, and I'll ask them both right away, so you could you can kind of answer them at your own leisure. So the first one is how do liquidations work? I specifically, how are they executed? Like you mentioned that they're executed with a Dutch auction mechanism. And then the second question is, besides the margin product, what are like some of the things in the medium to long-term roadmap of DDEX?
Yeah, so I guess like I'm just gonna start with the liquidation process first. So when a loan hit the liquidation price, which is 100%, 110% or less, and then the liquidation will be triggered by third-party initiator. And basically, the goal of the liquidation is very much like the CDP liquidation process. Is basically pay for the lending pool fully. So the Dash auction will just kind of like attempt to repay their debt entirely. So initially, there's only a small percentage of the collateral is offered for the auction, and after each subsequent block time passes, there's going to be offered a bit more of the collateral to be liquidated. And as I mentioned before, with different leverage, they have like different initial collateral rate. So with the 2 times leverage, the initial collateral rate is 200%. With the 5 times leverage, the initial collateral rate is 125%. So the liquidation line is always 110%. So it will scale about like 10% of kind of like profit margin if there's only one liquidator on the market. He can just wait for when the collateral ratio hits 100%, and he bites on the liquidation assets, and he will earn like 10%. But when there's 2 competitors in the market, very much like the liquidation process for keeper Maker, and there's so the keeper, if there's only one keeper in the MakerDAO system, he can earn like 3% on the discount.
So just a question to clarify: the initial collateral rate is just the minimum amount of collateral value that you're able to open up a position with at each of these leverage levels, right? So then, like, let's say I open up 5x at 125%. You're saying it only gets liquidated once it hits 110%? Or exactly. Is it collateral specific, or is that 110% kind of like a universal minimum threshold for you guys?
Yeah, 110% is a minimum threshold for all the position opened on DDEX.
Got it.
Yeah. So we did a lot of like analysis on chain on how much liquidity we can get for Dai, and how much liquidity how much position we can kind of liquidate within an hour period of time, even in the extreme time period when Ethereum price dropped to 20%. So we can leave us about 10%.
Nice, that makes sense.
Room for liquidation. Yeah. And also we kind of like we open source the liquidation bot on our GitHub repository, so everyone who want to be part of the liquidation and earns that liquidation discount on Ethereum will be welcome to join us. And I run a
Have you had any liquidations so far?
Yeah, we did. We have about like, especially about like 2 weeks ago, when the Ethereum price dropped like 20% in a day. We had about like $20K worth of Ethereum be liquidated within 10 minutes. But it's just getting started.
Nice.
And right now, since most of people who actually traded on DDEX are long Ethereum, they're Ethereum holders. So with the recent China news, most of them are far away from the liquidation line. So and they're ahead of the P&L game a lot. So
nice.
Recently, there's not liquidation event happen in the past 48 hours.
Very cool.
Yeah.
Very cool. So then, what's in the future for you guys? What are some stuff for us to look forward to in your roadmap?
Yeah. So I guess there's 2 things that's highly relevant to the MakerDAO community. The first thing is basically we are supporting the MCD right after the launch on November 18th, and there's going to be a parallel period that we will have like single Dai as Sai and also
Dai, right? Yeah.
On the
and for the people on the call that are listening that don't know, so on November 18th, the Maker Foundation, the integrations team, we're working with all of our partners to basically call single collateral Dai Sai, and then multi-collateral Dai is going to be called Dai. So very similar to what happened the last time the Maker protocol upgraded from Sai to single collateral Dai, because some people don't know, but there was even an alpha version before the current single collateral Dai that ran for, I think, about 8 months or something like that, 6 months. But yeah, so similar thing on the 18th, we're asking all of our partners to, all of our exchanges, everybody to rename a single collateral Dai to Sai.
Yeah, so we will do the rename right on that date, and also we will open the market, and then we will make the market for both Sai and Dai. And that's kind of like on the recent short-term roadmap. And also we are adding the WBTC, which is ERC20 version of the wrap Bitcoin. So on top of DDEX soon, and we will be using the MakerDAO Oracle for the Bitcoin price for liquidation as well.
Very cool.
Yeah, in my personal opinion, I guess it's actually beneficial for the ecosystem. So Ethereum is a world computing platform. It's actually can do all the financial tricks. So by kind of like taking the Bitcoins into the Ethereum community, we may well see more of the transaction and also borrowing and lending and this kind of DeFi stuff happening with the Bitcoin assets, and also with this kind of like really quick confirmation time and lower gas fee. That I guess like there's gonna be more of the use case for WBTC in the future, maybe for payment or for basically kind of like for this kind of like central exchange kind of like moving between each others. And I'm really excited to see more of the big WBTC exposures in the Ethereum community.
I agree. I would like some BTC liquidity reflected in ETH and ERC20 markets. Yeah. Right on. Well, cool, Bon. Thank you so much for coming on the call. And I definitely learned a lot about DDEX since I was not able to play with it until
yeah. Right now you can play.
Apparently now I can play with it. So okay, cool. I'm looking forward to that. Yeah, right on. So thank you for joining us, and really looking forward to seeing you guys grow and to seeing MCD and the launch go smoothly.
Yeah, I'm looking forward to it as well.
Right on. All right, cool. So for the rest of the call, the next 25 minutes or so, we're going to go through our usual programming. I'm going to go through like governance stuff first, then some stuff from the blog, some stuff from the highlights from the community, notable Reddit threads, and then a little bit about the events that are going on over the next week. So if you'd like to follow along in the agenda, I posted it here in the chat, so feel free to check that out. But yeah, I guess I'll kind of launch into it. So the first thing I'm going to talk about is the votes that have been going on. On October 21st, which was last Monday, we put out our usual stability fee adjustment governance poll, which seeks soft consensus to determine what the Friday executive vote for the stability fee will be. It closed with the winning option being the decrease to 5.5%. There was a minor UI bug where the winning vote at the time of the closing of the governance poll was showing as 7.5% when it was really 5.5%, and that was due to just some stuff in our caching layer on our site. But our team has fixed it, and some credit to Lix for helping our team figure out exactly what happened there. But yeah, 5.5% was the legitimate winning vote. And then the executive vote that came that following Friday on the 25th went live on the 25th at 4 p.m. UTC. And by October 28th, about 3 days later, the 5.5% stability fee was passed, which is, I think, the largest decrease that we've had. I don't think we've ever had a 4% decrease. We've had 4% increases, but never a decrease. So this was pretty cool. And there's some stuff to note about this vote in particular, because there was, I think, a couple Twitter threads that basically highlighted the fact that it was very nearly like one person that pretty much tipped the governance poll to be 5.5%. But then after they did that, the executive vote showed that there was follow through from many other MKR voters. And ultimately, like like at first people were kind of a little bit concerned about this lowering, but it turns out that for migration, from a risk perspective, it's actually kind of a win-win. Like Cyrus was arguing that given the upcoming migration, it'll cause like this rate decrease will cause a shrinkage in compound Dai market, which reduces the risk during migration. Basically, the lower rate incentivizes a lot of the secondary market borrowers to come back to Maker and drops the lending rate as well. So that it's much better for migration. All we have to do is increase the debt ceiling to accommodate for the increased Dai supply. That's going to happen when people from Compound come back to Maker, which is a little bit of what we've been seeing. So like I checked out Vishesh's graphs on loans.decipher.io. And basically it shows like the borrow volumes for secondary lending platforms, and they haven't gone down despite the fact that in the last day or two, there's been some 2.5 million Dai issued. So Dai issuance and Dai supply has been going up, but borrow volume hasn't been going down. And it's been kind of like this really interesting lag that's happening where even right now, as I'm speaking, you can actually borrow from MakerDAO and lend on Compound and make a percentage a year, which obviously is not a lot unless you're using very large numbers, maybe like a million or 2 or 3. But either way, the lowered rate is better for risk overall for the upcoming migration, and it's apparent that it's needed because Dai is still trading pretty consistently, slightly above $1. So yeah, we will see what the effects of this will be over the coming weeks. And so besides that, yesterday on Monday, we put out 2 governance polls, one again for stability fee adjustment. So people are able to vote if they want to adjust it again this coming Friday. And then the other governance poll was for the debt ceiling. So now that we're at around 87 or 88 million Dai, the debt ceiling is 100 million Dai that you can create against ETH. And so right now we have a governance poll asking, should we keep at least a 10 million Dai buffer in the debt ceiling until the launch of MCD? And basically, if this poll passes, it means that an on-chain executive vote will be created by the interim governance facilitator, which is Rich, at any time the difference between the Dai supply and the debt ceiling is less than 10 million. So if we hit 90 million and 1 Dai, and then like a few seconds later, we drop down back to 88 million, Rich is still going to put in an executive proposal to raise it by 10 million. And so this is obviously a risk measure. It's so that we give ample room for people refinancing back from Compound, which is I think a 30 million Dai market. I think 15 million of which is like available liquid in the protocol itself because it's like a fractional reserve, right? So yeah, if you're a MKR token holder and you feel strongly about safeguarding the system, you should vote on these polls. So yeah, kind of rebalancing my brain here. Okay, so if you're an MKR holder, a token holder, and you want to vote, and you don't have a ton of time to invest in learning about the issues that are going on, we have a really, really great thread that's run by LFW, one of our community members, Mr. Long for Wisdom. It's called the Governance at a Glance thread. I highly recommend you guys check it out. It has like a little 3-point summary about what's going on in governance, and then it has all of the relevant threads where there's active discussions going on. So definitely check that out. In addition, a lot of fresh information comes from the Thursday governance and risk calls that we hold. They happen at the same time as these community calls during the day, 12 p.m. Eastern Standard Time, midnight in Beijing. But yeah, absolutely join those. And we create summaries of those governance and risk calls as well. We usually post them. The governance call happens on Thursday. We usually post them either Friday in the evening, over the weekend, and like latest Monday. But yeah, generally speaking, those are there. They're a really good way to go through the whole hour-and-a-half long governance call in about 15 minutes. And so happy to share that with you. So Scott Sanderson is asking, what is the link to the governance call? So if you go on Awesome MakerDAO, we have the calendar links there. We also have the video playlist and the audio playlist for past calls. So you could check that out right here, actually. I'm going to link you straight to the header. Yeah, so you guys can find it there. We're figuring out ways to publicize the join details and the details of the call generally a little bit better. We've had some suggestions in the community to place some info on the governance dashboard, for example, which I don't think is a bad idea. But yeah, all of that is coming in due time. So yeah, definitely stay up to date. There's a lot of really cool stuff happening, especially with migration. So yeah. All right, moving on from governance. And by the way, feel free to stop and ask me, just as Scott did, any questions, anything you even want me to elaborate on a little bit. I'm happy to kind of get into to the best of my knowledge. So yeah, some partnerships, integrations, and grants. Only one that I saw, Visa-backed crypto custodian Anchorage launches a governance voting platform for maker holders. And they intend to support many other DAOs with tokens that have voting rights. So Anchorage is doing cool things. And this is coming off of, a few weeks ago where Coinbase Custody did the same thing. They have like a custom UI and method for how they interact with DS Chief, which is the smart contract that is the governing authority in the Maker protocol. So yeah, that's it for the partnerships this week. From the Maker blog, we actually had a really interesting segment in last week's governance and risk call from Wouter. So on the Maker blog, I guess the one real notable thing was the MCD security roadmap update that we published. I think we published it on Wednesday or something like that. And basically, it gives a whole ton of information about the security roadmap that has been surrounding multi-collateral Dai. Basically, for the last few years, we've run audits from 3 separate organizations. We've started a bug bounty program, and there's been a lot of overlap in their findings, which is very promising. So I guess I'll just read my notes here, but all 4 security tracks, which are the 3 audits, one from Trail, well, the 3 audit providers, because I think there were multiple audits from each, but it was Trail of Bits, Certora, Tech Shield, and then the 4th program was the Bug Bounty program, which was just a public program. So all of our efforts resulted in discovery of a number of bugs, which include some high and critical severity issues. We've taken steps to evaluate and mitigate these issues, and we continue to work with auditors to verify that we've completely addressed them pre-MCD launch. In terms of more immediate steps, we'll focus on the following. We're going to be doing a staged MCD rollout on mainnet, upgradability of instant access modules. If you don't know what those are like the rates module and other things. Definitely suggest watching the last governance and risk call. Wouter gets into a lot of this. And then we're also focusing on which contain the components to make direct. Oh yeah, the instant access modules, which contain components to make direct bounded changes to the Dai Credit System without consensus in DSG. Yeah, and that basically is just the rates module and like the freeze function for the Oracle security module. And we're also going to be focusing on an emergency shutdown and redeployment test run, I think on mainnet. They're probably doing it on testnet too, but either way, if you're interested in security, definitely hit me up or hit up Wouter. And also for more information on security audits, the bug bounty program, our formal verification efforts, visit this really easy domain, security.makerdao.com. And all of the information you desire might be there. I also, just for fun, kind of posted, like I really liked this, and I'm gonna share my window for a second. I really enjoyed this this chart. Hopefully I could actually zoom in a little bit. but if you guys could see what I'm presenting, oh, geez, yeah, this is not. You know what I'm gonna do? I'm just gonna click on the blog because the picture is a lot bigger there. But actually, I guess you guys could kind of see, but you could see the overlapping kind of findings here. One of the major critical bugs, the one that was awarded a $50,000 bounty, 50,000 Dai bounty, was actually found by PeckShield as well at the same time. So that was really, really cool to see that it wasn't just the independent person that found it from the bug bounty program. So yeah, I'm gonna stop sharing. Cool. And so the last little segment I got is the highlights from the community. There was nothing super crazy coming out, but I expect that there might be, given that ETH Waterloo is coming up, and they're doing a hackathon. And as we've seen from the last few Ethereum-based hackathons, people really, really like working with Dai and DeFi. And so it's going to be exciting to see what's going to be coming out in these coming weeks. For articles, there was the DeFi series statistics around the Dai stablecoin by Althea. They did a really, really cool thread on some analytics around Dai. I think one of the key insights that I saw that I didn't see anywhere else was that the growth in DYDX Dai lending percentage is encouraging over the last 6 months. By October 17th, the data we collected indicates that the monthly total borrowed amount of Dai on DYDX has surpassed MakerDAO since August. And I think it's talking about in like actual loan originations, so the rate of borrow over the last 6 months. And so in October, users on DYDX made up almost half, 49.37% of the Dai borrow demand across all major lending platforms. So yeah, they had some really interesting insights that they got out of their data. Definitely worth a read. It's not a super long article. And then a few notable threads from Reddit that I saw this week. MCD sounds dangerous for all of DeFi. In a certain sense, you know, it is, but that's also why, you know, we focused so heavily on our security roadmap and have gone above and beyond to really set the standard for code security in the space. And I think that, yeah, the main thing about that thread was the person was also scared about listing risky assets, which, you know, you could list a really risky asset. You just attach to it a really high risk premium and a really low debt ceiling, and it doesn't actually have much systemic risk to Dai. And that's kind of the beauty of multi-collateral Dai. We're no longer reliant on a single collateral, right? Like if ETH totally fails, Maker totally fails. But if you have like half ETH, half Bitcoin, then if ETH fails, you still can relax on Bitcoin. And obviously that's an oversimplification, but the idea is that multi-collateral Dai benefits from the diversification benefit of like modern portfolio theory. And it's really, yeah, it's actually a lot better than single collateral Dai. So although it is dangerous, like if this thing goes wrong, just like any major bank, if something goes wrong with a major bank, yeah, it's pretty dangerous, but that's why we're doing absolute best we can to ensure that that doesn't happen. So all right, the other threads were Dai is constantly above $1. It's closer to $1.01. Basically, why aren't people lowering the rates faster? And that was like 3 days before the rate was lowered by 4%. So it's always fun to see that happen. And then, you know, another notable thread. I don't think too many of these have been coming out lately, but every time I see like a decent one, I highlight it. But what is the Dai stablecoin? There have been a ton of like very beginner articles on it. And so that was a pretty good one. So if you want to point somebody, that's probably the most recently written one. But I don't think that can get too outdated, at least even now, because MCD hasn't launched yet. But regardless, yeah. And the last thing before I get into events that I want to highlight is Chris Bleck's video on using Dai. He put out a video that goes into lending Dai, saving Dai, swapping Dai, and spending Dai. And I think it's like a really cool snapshot of the current state of things, the current, I guess, utility of Dai. I can't wait to see each of those categories kind of grow in where you could use Dai, especially in the spending area. I would love to see more online shops and stuff like that that would accept Dai. But regardless, yeah, Chris Blake did an awesome video. Definitely worth sending it around to your friends who are getting onboarded into crypto and DeFi. All right, cool. So real life events for the next week there's only, I think, 4 of them that I saw that we're participating in. So in San Francisco, actually today, we're participating in an event called The Future of DeFi. Stephen Becker, our COO, and Nick Kunkel, who's our head of Oracles. I always forget Nick's title. Nick is the man. They're both over there representing at the Future of DeFi in San Francisco. Then tomorrow in Athens, Greece, we have Gustav, who's our European business development lead. He's participating and doing a talk at Decentralized 2019, which is a conference over there. On the 1st of November, we have in London, Gustav is participating in a MakerDAO meets WeWork event. And then lastly, on the 2nd of November,
in London.
we have, yeah, I said London.
Yeah, sorry.
Yeah,
in London.
Thank you for checking me on that though. Yeah, London. Yeah. Gustav is gonna be in London. Yeah, he's gonna be in Athens on the 30th.
Come guys, if you are there.
Yeah, definitely come if you're there. So MakerDAO meets WeWork. That's gonna be in London on the 1st. Definitely check that out. And then on the, actually, yeah, there was some stuff about WeWork. There was a possibility that they would give us access to like free meetings and stuff at their spaces, which is something that I was hoping to potentially give to people doing community meetups as kind of like a benefit. But I think I still need to talk to Gustav and them about that.
Yeah, we will have to discuss about it, because now they are like in a strange situation. But
I mean, yeah. Well, yeah, no comment on the WeWork situation. We'll see. But that would be pretty cool if we can secure some free space for people wanting to do meetups. I'm certainly hoping for that. And then the last event before next Tuesday is on November 2nd, and it's in San Francisco, and it is the ABC annual CTO party with Industrial Review, which is not a very descriptive name, but nevertheless, there's going to be a bunch of people there, and Nick is going to be doing a talk there. So yeah, that is about it. If I missed anything, feel free to bring it up in the call. Happy to cover it. But otherwise, we got about 3 minutes to spare. And I hope that was a good synopsis of the week at MakerDAO. And people are messaging me. All right, cool. Well, thank you guys for coming again, and definitely hit me up if you guys need anything, want to be connected to anybody, are curious about anything. Happy to point you in the right direction.
Bye.
Take care.
Bye.